That's absolutely correct. What does that mean? Well, you probably hear the term order flow a lot. What does it actually mean? It means in order for the price to change, there is a consumption that has to take place. For example, if the price is to move up, you have a supply of up ticks by the offer, okay? So the offer is sitting there, and unless you take away every available offer and the ones that replenish, the market will not uptick because the offer is there to consume whatever bid is going into it. But when the offer is overwhelmed, the price moves up. And until the offer stops being overwhelmed, the price continues to move up. And it's the reverse with the price going down. The bid is consumed. If it is, the price ticks down to the next price, to the next bid. And until the bid firms up to the point where it can absorb all the offers coming into it, the price will continue to go down. And so once we've contextualized our opportunity, once we know the market is venturing out and endeavoring to accomplish something new, to redefine normal, and once it has reached a mispriced location, the last step is in the structure that we need to incorporate is getting real-time proof that this mispriced scenario is actually producing a response from the agreeing party. You have two parties. You have the bid, you have the offer. The agreeing party in an uptrend would be the bid. So what I'm saying is, in this contextualized scenario, if the market has become mispriced, if it has become bargain, because this scenario is bullish, if it has become bargain, the bid needs to become the overwhelming party. It needs to overwhelm the offer. When it does so, and the offer can, I use the expression go away, and it doesn't mean there's none at the offer, but what it means is that there is a disparity in size, that there's a difference, a contrast between the two, and that contrast can result in a number of ticks worth of movement. In a bullish scenario, in a bid scenario, that means a number of ticks upward, where it might be 4, 5, like we saw Peter Davies talk about, or it can just keep right on going. We don't know. But what we do know is we want to have a structured approach to even recognize opportunity to begin with, and then we want to have real-time confirmation that our idea, that our analysis, that, hey, I thought I was in sync with the market. Yeah, that's great. But we want to know in real time whether or not the market is producing agreeing activity. With that structure in place, we're in a position to do something. What do you think we're in a position to do? Once we have this structure in place, we have trend trade opportunity layers, and there's layers to these opportunity, to what the opportunity consists of. We have clarified effort. On top of that, effort rewarded with progress, and I'm talking about the market's effort to move. After that, mispriced location, so the market in this context of either upward or downward movement, because these are trend trade opportunity layers, and there are different layers for non-trend days, for sideways markets. But in a trend trade scenario, we then wait for the market to approach and get into a mispriced location. And then once we have that, we wait for the market to produce real-time directional confirmation. And if we follow that, what types of opportunities then open up to us? Okay, T-Pain, you said trade with a tight stop. Giuseppe, price action. Okay, thank you guys. And so what we're able to do, and yes, T-Pain, you are correct, the stops can be quite small, surprisingly small. The risk is startlingly small when you follow this approach, and when you then narrow down your confirmation to order flow, it is surprising how small. I mean 4 ticks, 6 ticks, or less in terms of risk, sometimes only 2. And so, yes, that's correct. And maybe I didn't quite ask the question right. What I'm wanting to bring out here is it enables consistency. It enables consistency. And that's what we all need as traders. Any business needs consistency. Earlier I mentioned lawyering, I mentioned the courts. You can also think of your doctor, you can think of surgeons. You go in for a procedure, there is order. There is order, or there better be. And the order is followed because it's believed in. And when it gets difficult, the order is still followed because it's believed in strongly. And what happens? What happens is you can have a surgeon that might do 27 knee surgeries in a month or less time, multiple knees, and they all turn out reasonably good. That there's many more that turn out well than turn out poorly. You get a consistent result because order has been introduced, order has then become attached to, it's believed in, it's followed even when difficult, and the rewards do come. And so that's what opens up. But yes, a tighter stop is part of that. And so we need to, as traders, at some point, sooner or later, embrace a defined approach. Embrace it meaning I'm interested in it. Embrace it meaning I want to believe in it. Embrace it meaning once you learn it and it gets difficult, you stick to it. You give it attention longer than just when it's easy. And then you get rewards. And so how to embrace a defined approach? You learn specific market structure elements. The market does produce structural elements. Whether or not you can identify them is a major differentiator between struggling break-even traders and winning traders. Learn to see market conveyance. So learn to recognize progress relative to barricades like we talked about earlier. This one is easier said than done. The third is wait and only trade in a high pressure location. High pressure is just another way of saying mispriced. Mispriced, like we talked about with Coca-Cola, there's inherently pressure there. The pressure when the price of Coke goes down is from the buy side. You quickly go and grab some. Or you just left the store and someone calls and says, hey, by the way, it's on sale, and maybe not. I don't have friends who call me and tell me what's on sale, but I'm just saying it creates pressure when something is a ridiculous bargain. So without knowing the context, though, we have no idea if it's a bargain or not. And then lastly, to start building winning habits, execute trades using agreeing pressure in real time. So you can do that manually. You can watch the bid and the ask, learn how, and it is learnable, but it's also high labor. There's no two ways about that. I've done it. Anyone who's ever done it will agree that it is high labor to trade order flow manually with your own eyes and with your own understanding and with your own clicks. And so we talked about these here, when to accept progress and advance to the next step, when to reject progress. Again, talking about a structured approach, letting the market convey its move. You have to be able to recognize whether or not a move is acceptable or not. So it's, if you notice, putting the pressure on the market to prove its position, to show its hand, is a fantastic basis from which to operate your business. Many businesses operate this way. If you have a different business other than trading, you undoubtedly operate your business in this way. If you have, whatever it is, if you offer a service or you sell a product or you purchase products, whatever you purchase has to meet certain standards, or you say, no thanks, that's not for me. And those standards can include both quality and price. You can say, I want it, but I certainly won't pay that much. I can't make any money. Or if it's a service, I'll do this, but I won't do that. And we accept and reject, and we differentiate one opportunity to the next. And by introducing this structure, it puts you in a position to differentiate trade opportunity one from the next. They're not all created equal. Like we talked about earlier, looking at falling in love with a trade setup, getting tunnel vision, that's treating that trade setup as an equal scenario. Every time is just as good as the last, and that's simply not the case. So with regard to execution, real-time order flow confirmation is highly valuable. Doing it manually is high labor. What I've produced, and it looks like I may be on the ending point of my time here, so I just want to respect everyone's time. What I've produced works with futures, works with stocks, and works with ETFs. The structure, the approach, the clarifications works with any of those, any symbol within all of those items there. You can use software, which is what I've produced, software that recognizes shifts in order flow in conjunction with the market structure elements that I teach, and that I also have indicators that help clarify. I also offer trade approach consulting. And so if you feel very good about your approach, but you think you just need to tweak it here or there, like I said, I've worked with hundreds of traders, and so I can simply listen and take a bird's eye view of what you're doing and offer assistance in that way. And then also, if you want to become a Supra certified trainer, so that means if you want to learn to the point of knowing it so well and using it and being good with it, the approach, and then you want to be in a position to be able to make money training other interested traders, you can also do that. At this time, I've got you guys, I just put a video screen up on the, it's the start of a video. It's got a risk disclosure at the moment. Can you guys see the risk disclosure? Aha. Looks like maybe my question, I just got it to work a little bit better. Okay, good. All right, thank you, Raymond. Thank you, Nigel. All right, so risk disclosure. So let me just go ahead and play this. So it's been up for over 5 seconds. So this is on the screen here. I have on the right-hand side, you'll notice Fill Finder, and that's the software that recognizes shifts in order flow pressure in real time. In addition to that, it will also execute the trade. It will place your stop, and it will also place your targets. Once those are placed, you can then grab and move them on the screen, and I'll show you that in a moment. But as you can see here, you simply type in your zone prices and then just click Activate. You're able to select your quantity as you go, and there's multiple other things, and I can show more about that if you're interested. But I'll go ahead and push play. So everything is set. I've clicked Activate. The market has produced movement beyond a barricade that's acceptable, that's usable, and it's now becoming mispriced. And so, as you can see, and I'll just go ahead and pause it, as you can see, it once filled, it shows your fill price on the screen, and also on the right, it shows your stop price, which is the red, and it shows your target prices, which are your green. Now you have 2 targets that you can work with, and you don't need to use 2. You can just use 1. It's very flexible. But you have 2 targets that you can use, and if you do, that's what it looks like. And so I'll go ahead and push play. And this is from just the other day. So looking for the market to, as you can see, I move the target down, looking for the market to fill on a retest of the low. Stops now at the entry, and a small target has been filled. So I'll just pause it here real quick. Already, just highlighting what's happened. Got filled, stop went right around the outside of the order flow confirmed event automatically. A smaller target was reached when that happened, this red line representing the stop loss moved to the entry. So what's happening? Target 1, 7 contracts. Target 2, 4 contracts. 7 took a small profit. The stop on the remaining 4 is at the entry. So even if this trade comes undone, what's going to happen to the P&L? Unless there's monster slippage, it's still an instance where you're going to make a little something. And that's if it all comes undone, which sometimes happens. So as you can see here, now it's trading right by the target. Okay, so that filled. And now this is the same day. New movement now. And this is not showing all of the various barricades and how those were arrived to and all that stuff. It's more of a gloss over look, but it shows the functionality of the software. So we can see here again, it got up into a mispriced area. I activate the zone, and then the software reads the order flow. So that final step in the structured approach is handled 100% by the strategy. This opens up the way to be able to trade more than one market at a time. Because once you set your level, the software has no idea if you're sitting there watching it or not. It will function regardless. And there's all kinds of adjustments you can make. You have control over where the stop goes, when it moves, how large it is, on and on. You have so many different controls. But you can set those. It will do what you tell it to do, whether you're watching it or not, which means if you think an opportunity is shaping up in the U.S. stock indices, normally you might only trade symbol NQ, let's say, NASDAQ. Well, now you can watch RTY, you can watch NQ, you can watch ES, and actually execute, not just watch and go, wow, I could have made a lot more. And so that's just highlighting another trade. Now, there were 2 trades in here. One was a losing trade, stopped out, and then the market recognized a shift once again, got short once again, and in that case, we can see it continued on to the downside. And that's just from this past Monday the 19th. And so that's a look at how PhilFinder plus automation works. So here, if you want to contact me, and again, if you have an interest in trading futures or stocks or ETFs, this works for any symbol in any of those categories. If you have an interest in the Supra approach and you'd like to learn it, then you can contact me and we can set up a time. If you'd like to just get help with your own trading, you don't want to learn a ton of new things, you just want to tweak a few things and you think this might help, then we can set up a time for that. And we can discover whether or not what I have to offer can actually help. And then lastly, if you want to make money in a different way other than trading, but in the same field, you can train other traders by becoming certified. And so Supra certification is a process. It can be done rather quickly depending on your schedule and how much work you can do. The maximum time is 6 months, but it's self-paced, and so it can be sooner than 6 months, but that's kind of the further extent of it. I see a few questions here. Let's see. Okay, Tony. Can PhilFinder be used on different platforms, or which platform do you use or broker? It's available in NT7, and that's where it functions right now. NT8 also will be available soon, but NT7 is where it's at right now. If you use a different platform and would like to use what I've shown, you can just email me, which you can actually go to tradingsupra.com, and it's very easy to contact. And so you can do that. That'll go right to my email. And so NT7 right now, but if you have a different platform you'd like to use it in, just go ahead and send me a note and let me know. And are there any questions outside of what we've seen? Let's see here. Yes, you can. Nigel just asked a question, and I hope you guys can see that. Now that I've seen it was micro, but now I've been able to expand the questions aspect of this here. So now I can see these. Can you have support and resistance set up at the same time at different levels? Yes, 100% yes. Another question that often comes up, I haven't seen it so far, but I thought I'd just tell you. If you like a view other than a minute-based chart, so let's say you watch range or you watch tick, it will also function based on watching from a different periodicity. It doesn't have to be a minute periodicity chart. So if you're set up on a different periodicity and you love that view and you don't want to change, you don't have to still use Fill Finder. But everyone, guys and girls, I truly hope this has helped. If anything, just help you see that there is a way forward using market structure. There are known elements that are reliable, all of which, if you put them into a sequence, if you organize them, then you can have from that effort, what do you get from it? You get the chance to become consistently profitable. And that's hopefully what you guys realize from all of what we've talked about here today. But if you have any additional questions, let me know. Otherwise, I'll hand it back over to Dan. And again, just want to say thank you.